So the Fed just raised interest rates again, making it yet again more expensive to borrow money. But there is a way that you can come out on top. And today we're going to talk about that. It's high yield savings accounts. Hey everyone, my name is Zach with No Debt Mindset. In today's video, we're going to be discussing a little bit about high yield savings accounts, how they're related to the federal funds rate, and how you can come out on top making more money on the money you just have sitting in your bank account. Let's go ahead and get into it. So what exactly is the federal funds rate, or the Fed rate, and how does it affect interest rates? So the federal funds rate is the interest rate that banks charge each other to borrow money overnight. According to the Federal Reserve, institutions borrow money and lend from their reserves after hours in order to meet regulatory requirements and be ready to manage market conditions. The funds rate is set by the Federal Open Market Committee, which the Federal Reserve uses to help adjust monetary policy based on economic conditions. Now, what does all this jargon mean? For example, rising rates can help ease inflation. A higher federal funds rate can generally lead to higher rates for loans and credit cards. So that encourages less people to spend money, slows down inflation, and makes things less expensive. So higher funds rates also have implications for those who invest in loans and loan-backed securities, such as bonds. In a rising rate environment like this, the one we've been in for the last year or so, bonds that were purchased previously when rates were lower tend to have less value than newer bonds that pay more interest. This is why you see a couple of regional banks like Silicon Valley Bank starting to fail. But why does the Fed raising rates make banks want to pay you more for storing your money with them? So it's pretty simple in the long run. Banks can still make a return on the money that they pay interest to you for because the federal funds rate is so high. So let's say a bank pays you 5% for you to store their money with them, and they're charging 7% for a loan. They're still making 2% of a return on that investment. So as the federal fund rate gets higher and they can charge more for people to take out car loans or home loans, whatever kind of lending they might do, they can afford to pay people more money to store their money with them, because in the long run, the bank is going to need money to fund the loans that they're giving out. And if they can be as competitive as possible and encourage as many people as possible to store their money in the banks, they'll do that. So what that leads them to do is give really competitive annual percentage yields to people who store their money in those accounts. What that means is right now, with the rate hikes happening almost every couple months or so, we just had one recently at the beginning of May. Get your money, your emergency fund, or whatever kind of savings you have, to a high yield savings account. Now, this isn't the only thing that you can store your money in right now with these high interest rates. You can also take out a CD or a treasury bond or something like that. Now, the nice thing about a high yield savings account, though, is that the money is still very liquid. In something like a CD, you're going to have to wait a number of months, 5 to 6 months or something like that at a minimum, when you put that money in before you take it out. High yield savings account, you can usually get your money within 1 to 2 days. So which high yield savings account should you go with? Now, there are plenty out there to choose from, and I'm sure everybody has a different opinion. So I'm not going to give you a rundown of the best or the worst. I'm just going to tell you what I have. I have Wealthfront's high yield savings account, specifically because I feel like it has a really good user interface. It's really easy to use. And if you invite a friend, you can get a boosted APY. So their base rate right now is 4.55%. But if you invite a friend, you can get up to 5.05%. So you're putting your savings account in a bank and you're earning 5% on it. That's as good as some stock investment. And this is a guaranteed return, guys. So some other options, if you don't want to do Wealthfront, there is an account recently created by Goldman Sachs called Marcus. Citibank has one. SoFi does an HYSA. Plenty of other banks do it. I would say go out to Google, search high yield savings accounts right now, and look at their rates, look at the current rates and who's offering the most competitive rate. You might find a fringe bank that's offering a really good rate that they might be trying to be a little more competitive, and that might be a good option for you. I would just make sure to research the bank, make sure they're FDIC insured up to whatever amount you want. My personal account with Wealthfront is FDIC insured up to $5 million. I would say if you're a high wealth or high income individual and you're wanting to store a larger amount of money in this high yield savings account, make sure to really research that FDIC insurance, because that's going to become a big portion of what goes into making your decision. But at the end of the day, the message here is to get your money into a high yield savings account, because as the Fed continues to raise rates, it's very likely that the interest you earn on your money that you're saving in these accounts is going to go up. The worst case scenario, the next meeting they have, they don't raise rates and they just stay the same, and you continue earning the 5+% on the money that you're keeping in that bank account. Because think about it, guys, if you're storing only $10,000 in your high yield savings account, you're earning $500 on that per year for just having it in your savings account. And that's a lot higher than you normally would have. Normally something below 1% or maybe 1% if you have it in a normal savings account like with Capital One or something like that. So my suggestion is definitely get that money in a high yield savings account, because as your money continues to grow, let's say you build up a huge emergency fund of $100,000, you're getting paid $5,000 a year money just to sit there. So it can only benefit you, and I highly recommend it. But with that being said, guys, that's going to wrap up this video. Just wanted to give a quick rundown of high yield savings account and how the Fed funds rate affects that. If you like this content, if you want more of it, please like, subscribe, comment, and we'll see you in the next one.